Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. This is drstoxx.com. We've been in the trading business since 2002, if you can believe it. Here it is, 23 years later, and we're still going strong. And if you want to join us, this is coming to you live today from the live options room. And if you want to join me and a really nice, great group of traders, all very helpful at all levels of trading experience, some who've never traded options before, and some who trade them every day and everything in between, go over to drstoxx.com, click the subscribe button, scroll down to the live options room. And if you want to add on our flagship live service, the live trading room, been in business since 2020, the COVID crash kind of got us started, then you can do that at a 40% discount. Click on that as well. All right. Let's start. So I said to the folks in the room that I wanted to start over here on this site, finviz.com. If you're not familiar with it, you should be, because it's a very good place to go for all information regarding the market right now. So you're going to get all kinds of stuff in here. And I just want to introduce you to some of the features. If you're behind on the news cycle, like, what is Trump tweeting now, or what legislation did he just sign this morning, or what is the Fed about to do next week, then click on the news tab. And if you're needing to find some stocks in the market that are satisfying certain parameters that you like in a stock, then you click on the screener. And if you want to keep watch lists of stocks, which is what I do, strong stocks, weak stocks, value stocks, growth stocks, stocks related to semiconductors, crypto, and all kinds of stuff, you can build a whole bunch of watch lists under the portfolio tab. I usually go to the home page here. You're going to get a very good picture of what's going on in the market today with these 10-minute charts of the four major indexes. The Dow Jones, which you can see is quite strong, it's up 326 points today. The NASDAQ, which is down near the lows of the day, and flirting with a break even, although it's a little bit off the lows and is starting to look a bit constructive here. The same with the S&P 500, which is pretty much the same index, because they're both weighted indexes and they're both driven by the big 10 mags at the top. And the Russell is leading the way higher with 1.4% return today so far. And that's very good to see, because if small caps are happy, the whole market should soon be happy. So what we're getting today is a typical rotation tape. We had a very strong day yesterday, broad market rally all across the sectors, and everybody and their mother was up yesterday. Today it's a lot more selective, and you can see on the heat map here, these are the S&P 500 stocks, and they're red if they're down, green if they're up, and the shading, of course, determines how far they're up or down. And you can see the mags over here in this northwest quadrant are mixed. Right? You've got Facebook down, Google down slightly, Nvidia's down quite hard, Avgo's down even worse, Oracle is way down, Microsoft is down, Amazon is up, Apple's up, Tesla is pretty close to flat. So the market's not that happy with the biggest companies on the planet today. They were happy yesterday, not so happy today. But that's okay. That's just part of the consolidation of gains over time and allowing valuations to catch up. Well, what is happy today? And the interesting thing here is that we're seeing money flow into sectors that don't normally get money flow, at least here in 2025. Healthcare, for example, right? UNH. We've got UNH shares on in the live trading room. We just added a little bit to that position today. It's of course got whacked way down and is well off its historical valuation, so it's a good value play. Lilly is up 2.5%. Merck is up 2.25%. So the healthcare sector is good. Some of the big banks are doing fine. Some of the software names, which are many of these are really beaten down, really like historical PE ratios that we haven't seen before. CRM and Now and Adobe are three that you want to take a look at. They're doing okay, right? They're starting to bounce back a little bit. Home Depot and the whole housing sector is really strong today. So we have calls on of PHH M, which is the Pulte home builder. We were in a trade with Nail, Nail, shares of that in the live trading room, and I got out a little too soon. It did hit our target. I think it's hitting our target today. But the home sector is doing fine. Why? Because interest rates look like they're going to be coming down sooner than the market expected. And that's a good thing. Inflation's coming down and homes are getting more uh, affordable, and the materials that go into the homes aren't being hit by tariffs as people thought they would be. So all that's good. The defensive sector, you'd think in a bad market, like a slightly skittish market, the the staples sector would be really strong. Well, it's not. It's not, because money is not flowing into safe havens today. It's flowing into beaten down value sectors. It's a different kind of play. So you're seeing Walmart down, Costco down, Philip Morris is down, and Coca-Cola is down. So it's not a flight to quality kind of market. It is a flight to value, I guess. I mean, that's quality as well, but it's not a flight to safety, I should say. Um, okay, so anyway, that's the heat map. I like to use the heat map to get a good sense on a day-to-day basis of where the money is flowing. When you start to see patterns in that money flow, you'll know what the strong sectors are and what the weak sectors are. Now, you can also just hit the groups tab and you're going to get a very instant view of that, right? Here's the healthcare consumer cyclicals, right? Your big spontaneous purchase type things. Tesla's in there, of course, and some other things, Whirlpool and others. Consumer cyclicals, basic materials, real estate, they're all doing well today. Down at the bottom, consumer defensives, I just mentioned those, utilities. So it's not a flight to safety. And technology, which is usually doing pretty well, is down near the bottom. And you would go down to like the quarter performance, communications, that's your Google and others. Comcast. Technology is number 2. Basic materials number 3. Industrials number 4. And healthcare is the weakest over the last quarter. So you can get a pretty good sense of where the money is flowing by going there. And then the last thing I want to show you here, actually, one last thing on the home page, if you scroll down, you get all kinds of stuff on this homepage. Insider buys, who's reporting earnings, and what are the big news events. What stocks are way up, what stocks are way down. You get all that here on the front page. But the one I want to show you is this little tab right here. This kind of, I don't know what you call it, but this little insert. This is where you find the most important economic data that comes out each day. If you click on it, you'll get a week's view of economic data. We had CPI yesterday, and that came in line for the most part. And that the market liked that, so the market was way up on CPI. Now tomorrow we have PPI coming out. CPI is the inflation you and I pay. PPI is the inflation the companies pay, right? Producer price index. So you don't want to see inflation in either one of those. You want to see a tame number or something in line. You don't want it to be a surprise to the upside. But I think PPI is probably going to follow CPI and come in line. The market should be okay tomorrow with that. And then Friday we get retail sales. That's usually a mover of the tape for a little bit. It's not a big deal, but if it's a big miss to the downside, then that's not so good. All right, so just again, this economic calendar is a place you can go to keep abreast of what's going on in the overall economy. Last thing I want to show you, screener tab. Now I have a bunch of screens in here that I've preset already, safe stocks, power gaps, best small caps, right? Cheap value growth. That's a fun one. The one I want to show you here, where is it? Strong longs. What goes into the scanner? Let me show you. You can fiddle with it a little bit. If you want to replicate this, you can feel free to. Finviz is a free service. You just have to register with it, and then you'll have full access to it. You can get a paying subscription to Finviz, and maybe that's it gives you a little more functionality, and you don't have to have the ads popping up all the time. I don't have one, and I've never really needed one. All right, so what are the parameters here? Well, the two things I always put in, or rather 3 things actually. Uh, the price of the stock, I don't want penny stocks. I don't like to trade stocks usually in the single digits. Every now and then I'll do that, but mostly I don't, especially when you're thinking about calls and puts. You want to have a pretty good number in the price so that when it goes up $2 or $3, which is easy on a $50 stock, you're going to get a much bigger increase in your calls. If you're trading a $2 stock, it's pretty hard for that to go up $2 or $3, right? So I start here at $10. I'm going to fiddle with that a little bit because this scan brought back 64 stocks. That's a little bit too much for me to scroll through, and so I'm going to raise that a little bit. Average volume over 500,000. I would recommend nothing less than that. You don't want to trade illiquid stocks. And then I like to go over here and put on a beta of at least 1. And I'm going to fiddle with this one. I'm going to say over 1.5. And that gets me down to 17. So that's a little bit too much of a reduction. I'll just leave it here at over 1, and I'll fiddle with some of the others. So what is beta? Beta is a function of how volatile a stock is relative to the S&P 500. So if a stock is trading at a beta of 1.0, it is exactly as volatile as the S&P 500. There are stocks that trade below that. There are stocks that aren't as volatile. They're great, big, gigantic. Maybe something like IBM or Coca-Cola might have a lower beta than the S&P. Most of your tech stocks have betas above 1.0. So 1.2 would be 20% more volatile. 1.5 is 50% more volatile. So like a 2.0 beta, if this S&P goes up 1%, your stock likely on average is going to go up 2%. And we want that. We want that movement, right? So I'll leave that at 1, but let me fiddle with some of these others. I've got sales growth quarter over quarter. That's a very key driver for near-term price movement. I want to have that a positive, but I don't want it to be a bad quarter. EPS growth this year, that's kind of mirrors the expectation going forward over the next few months. You want that to be positive. You don't want a negative contraction of their earnings. And I have an analyst recommended at buy or better. It's very important. You'll learn this when you do some research on what makes stocks move. Over the next quarter, having analysts in your camp positive about your stock, writing positive commentary, upgrading their price targets, upgrading their recommendations, and coming out reiterating all the time, that's a very important factor in keeping a bid under your stock. So put that at buy or better. 52-week or higher low. So I want these to be strong stocks. I want them to be up near 52-week highs. And I've got this somewhere between 0 and 3% under, no more than 3% under all-time highs or 52-week highs, right? Now that's one I could fiddle with a little bit. So let's see if I put this down. Actually, I want to tighten these parameters. So I'm not going to tighten that one just yet. I'm going to go up to $20 per share. I did a research on this a long time ago. There is a sweet spot in price where you get the greatest amount of volatility, price movement, for the least amount of cost. And that sweet spot is between 20 and 50, $20 per share to $50 per share. You're going to get the greatest amount of movement for the least amount of risk. If you get under 20, you're starting to take on a little too much risk. And if you get up above 50, you're getting stocks that maybe they don't move quite as fast as you would like them to. Now, the way stocks are priced these days and the way so many of the big mag stocks have been, cutting, what do we call it? The splits. They're doing all kinds of splits. That's a little bit different now. So I would maybe increase the range 20 to 100 or 20 to 120, something like that. You have to go up a little bit higher these days to get the right kinds of stocks, but that used to be the rule of thumb, 20 to 50. So we'll start with 20, and then I'm going to actually go EPS growth this year of over 15. All right, gets me down to 39, and let's do a sales growth quarter on quarter of over 10. It gets me down to 26. All right, that's a pretty good number. So let me let's just go to basic. Whoops. Sorry, my computer just froze up there for a moment, but that's it. We're back. We'll go to basic. which gives me, um, is it basic? Yeah, a bit basic. So it gives me some of the fundamentals on the right side of the chart, and then the price chart, technical price chart over here on the left. And yeah, so what am I looking for? So I'm looking for obviously uptrends. All of these are probably going to be in pretty good uptrends. I'm looking for something that's green today, not red. I don't want to get into a stock that is selling off because that could trigger more selling. So these first three, this one is good, right? APG just a little bit under the all-time 52-week high, and it is green and it's up today. So on a weak market day, we want to see something green, and we would avoid this one and Avgo and BCS. This one looks good. It's a real estate, so anything tied to real estate is doing well today. So here's the pattern, right? So you've got this nice uptrend, and then you a little bit of a consolidation, rounded bottom cup, and then breakout. Rounded bottom cup, and then breakout. Looks like we're just starting a new breakout, so that could be a buy today. We would skip that one. This one looks pretty good. Now this is your power gap right here. I would assume that's on earnings, and a power gap is when you get a big up on good news of some kind, and it never comes back down to that gap. That gap stays open. That is a very bullish setup, and it's also a very low risk setup because it's not going to come back down to that gap if it hasn't in a couple of weeks. So yeah, this one, I wouldn't say it's a buy today, but it was a buy a couple of days ago, a few days ago. I'm just going to scroll through these quickly. We found a couple that we like already. Whoops, you have to have ads when you do this. There's a big rejection, right? So this is a communication play, very big, high volume print, all the way up to 130, and now is trading at 119 in the same day. That's an obvious avoid, right? You don't want to get into that one. Here's Facebook. We're long Facebook in the other room, and it's not doing it as well today, but it did really well yesterday for us. And it's just doing a little bit of consolidation there at the top of the range. I think it's going to be okay. It was this tight little bull flag right in here. That little tiny inside day bar, that was our buy signal, and we got in at the beginning of yesterday's trading. Red, nice little consolidation in NVIDIA. I think NVIDIA is just not going to go down. I mean, it will eventually, but I don't think it's going to go down anytime soon. Here's one that gave a nice buy signal down in this area. The UPST, right? This is a big growth play. It's often a big momentum play. And it was down here, now down near some support, 50 period moving average, gave a nice 3-bar reversal. Took a few days to get going. It was a big up on earnings, and now it's continuing higher. It's not a buy right now necessarily, unless you like that kind of momentum play. But this one looks good. This is it got rather boring food distribution play, but it at least came back, printed a hammer candle off the supporting trend line, follow through the next day, and a big up today, up probably on earnings today. Yeah, kind of tough finding a stock that is either just hasn't just announced earnings or isn't just about to announce earnings. It was right in the tail end of this quarter's earnings season. This one looks pretty good, STX. I know this company. It's a very sound IBD top 50 kind of stock. And anywhere in this area you can buy it. Looks like a gap down on earnings. That's a pocket pivot right there. One of my favorite setups. And right back up, back down, back up. Higher sequence of higher lows and kind of banging on the same highs. That's a breakout potential right there. I like TSM. I wouldn't buy it today on the red bar, but it looks like it's very soon going to break out to the upside. This one too, Urban. A lot of folks are getting interested in this one. It's I'm kind of scratching my head on it because it's not a tech stock. It's a clothing company, and I think they almost went bankrupt a little while ago, and back on their feet. Anyway, this is a nice looking setup. And so is that one, Vic. All right, so I just wanted to show you that. I'm going to jump over now to Trading View. We'll take a real quick look at indexes. So we are just green with the S&P. We are just red with the NASDAQ. And the big excitement today is all in the small caps. Big follow-through day. This is very good to see. I've been a little bit skittish on small caps. I haven't been in either TNA or the micro E-mini for this index in a while. So it did the inverted head and shoulders breakout. I don't think it's all the way up to target yet. Target's still ahead of us. And then it did this sideways consolidation. At the same time, the NASDAQ and the S&P are rallying up to new all-time highs. The small caps were lingering, lounging down here, well under all small-time high. You have to go back a couple of years to find the all-time high for the small cap index, and we're not near it. Nice little pullback here with a reversal off the 50-period moving average out of the pink zone. That's a good buy signal. And then it went flat for about 5 days. Again, a red flag concern, because the other indexes weren't flat. This one was. Then all of a sudden, somebody just lit a fire in it yesterday, and it was off to the races. You've got a fresh MACD buy signal. You've got so the long term. I think this is maybe why it's been kind of held back a bit. The long term, this purple line here, this is the cycle indicator. When it is falling, you tend to get failed rallies. When it's rising, you tend to get much more successful rallies. And right now it's falling. So we'll see how long this one lasts. I just wouldn't want to get in right now and you get trapped. You don't want to get trapped. Okay, the NASDAQ all-time high this morning, it was a rejection. I think it's a temporary rejection. We'll probably come in a little bit, maybe tomorrow, off of PPI, and then it's just not. We're just in buy the dip mode until further notice. There's no way of saying it otherwise. So I do like what's going on here in the S&P. I think this is a little bit more of a rational setup, right? You've got the all-time high here. You've got 4 or 5 days of pretty frustrating trading, because every day it was a gap up and a crack, gap and crap, gap and crap. And we had several of those along the way, but every time we did, we got higher the next day. And now we're flirting again with all-time highs. And yeah, there's just nothing in this chart. It was a little bit right here, I have to say. Thursday, Friday, heavy volume, took out a couple of weeks of range lows, broke the 21 EMA. I had my doubts at that point whether the rally would continue, and I think there was something in the tariff news that turned that right around. Okay, so the bottom line is all of the indexes right now, even the Dow, is looking really good. Right, this is, in fact, we're long the Dow in the other trading room, using the micro E-mini, and this is why, if we can kind of condense this, it's doing now what the small cap index did a little while ago when you saw that inverted head and shoulders. Here is a very broad and very deep head and shoulders pattern, very bullish, and this is up near all-time highs. And when you have rally, and then you get a head and shoulders over several months, that's a continuation pattern. It's not a bottoming pattern, continuation. And we're just about banging up on a breakout here. Now, where is it going to go? Well, this is the bottom is 37,000. The neckline is 45,000. So that's an 8,000 spread. You add that to 45 and you get 53,000. Overnight, no. By the end of the year, maybe, probably not. But I would say by this time next year, you're going to see the Dow. We should see the Dow, all things being equal, up here around 53,000, which is way, way, way up there, right? Okay, so quick look at the mags. They're very mixed today, not doing that great. Avgo and NVIDIA, and well, those are the two big semiconductor plays. They're there at the top. Qualcomm is busting that narrative by being nicely up today. And it's very good to see CRM back, at least in the green, because it has been ugly. Down here in our 52-week lows. And if you go back, you're going to see multi-year lows, at least yesterday. And there's not that much wrong with the company. There's a lot of competition out there from smaller players, but this is the biggest customer management software play on the planet, and I don't know why it's been so sick. But anyway, it's back, and is it a buy? I don't know. If you like value plays, sure, go for it. And I would add Adobe in there as well, but it's not my kind of setup. I like stocks that are closer to the highs rather than the lows. Okay, so Netflix is not looking real good. We looked at this in the other room yesterday on live chat. It was a crack of the 21, right, and a little bear flag, break below the 50, and then we had this new bear flag forming here, or let's call it a relief rally, up into the 50. And usually, when you come into the 50 period moving average after you've broken it for the first time, it typically rolls back over again, back down. So I wouldn't want to be in Netflix, and it's certainly not a buy until it sorts this out. Uh, I kind of liked Microsoft yesterday because it was a big up on earnings. You don't usually want to see an earnings gap get filled, which is what this did, but it was at least above the 21, the pink zone, and it yesterday started to look like it was forming a nice little rounded bottom uh, and move back up to the upside, and it's just a big gap and crap today, and it's down near the lows of the day. So it's not looking very good. And the other thing that I don't like about this Microsoft chart is you just have all of these red bars on heavy volume. That's a lot of distribution. People are getting out of this stock, not getting in. And you don't want to be the guy that gets in only to see it go down another 10%. So Microsoft is an avoid. NVIDIA is just great. Buy and hold, buy and hold. Let's take a quick look at Apple, which is nicely green today. It's gotten back on track, and it's no longer in my no-go zone. It was, as long as it was down here underneath that resistance line, it was in my no-go zone. And then it looked really ugly right in here when the market was doing fine. It was looking ugly and lots of red distribution, heavy volume, people getting out. And then it printed earnings and the market wasn't happy with that. That's never a good sign. But this whole thing with Trump, right? So the Apple is pumping $500 billion into the American economy. And now it's got all kinds of political tailwinds, and the market recognizes that. And the whole narrative has just turned itself around. So I don't see Apple as a buy right here, but it is a hold. And frankly, there wasn't really a very good place to get in unless you knew that was coming. If you knew that was coming, then you would get in over in this area right in here around 210. At the same time, it is Apple, right? And you know it's going to bounce back eventually, but it just didn't. It just wasn't showing me the relative strength that you want to see in your new trades. But if we can catch a little bit of a pullback, maybe back down to about 225, then it would likely give us a new buy signal there. Okay, we're long Tesla in the other room, and it's on the breakout and a hold up here. It's looking pretty good. I would say it's not the most robust stock out there, but it is Tesla and it does move fast. And I think 400 within the next couple of months is a lock. So we'll see how that plays out. Okay, real quick look at some of the greens list. We'll do worst to best. You've got some of the quantum names not looking real good today. I'm not sure why, but I know a couple of them had earnings out. Every time I look at a quantum name, I'm often seeing this red earnings symbol here, which means it was a miss. So for whatever reason, the market's overestimating what these companies can make, and they're disappointing every time they come out and give their earnings. So not a good thing. Hood is one to watch because I think it's a good long-term hold. It's making all the right moves, adding new product lines. It's a favorite, of course, with the younger generation. My daughter and all of her friends use Hood for their trading, and they do trade. It's a strange generation. They love betting on sports, they love going to casinos, and they love trading stocks. I had none of that when I was growing up. And if anybody did have that, like if you had a friend whose parent was into the casino, you kind of think, what's wrong with that guy? Now it's all the rage. So anyway, it is what it is. Hood is taking advantage of that trend. It just is ugly today. This is a classic bull trap. You don't ever want to get into a bull trap, but the problem with bull traps is you don't know they're a trap until you get trapped. So one of the reasons why I try to not buy early breakouts, because they do this quite often, right? They come back and they retest the neckline. But I think what's really happening here is that this is a more of a falling wedge than a horizontal base. And we had the breakout, and now what we're doing is coming right back down and testing that level. Now, I said in the other room, I said, watch out for 105, 104, because at that level on an intraday basis, you've got a really good level of resistance. It's a volume shelf. We broke up through. Now, if we come back down and test that level, then it should hold and bounce quite nicely back up. And how low did it get today? It got down to 107. So let's watch it over the next day or two, and let's see if we can't get a decent entry down there around 104, 105, which is right about where the 21 is, right? Yeah, 105.50 is the 21. And if it gets down into the pink zone around 104, I would like to buy some. Net is a good looking software play. It's not looking good today, but it is doing a nice soft pullback into the pink zone. Very good fundamentals. MicroStrategy is kind of falling out of favor, unfortunately, as a Bitcoin play. And everybody's all excited now about all the Ethernet plays that are out there. And I think it's taking a lot of attention away. And plus, they've done some dilution, and the market's just not as happy with it as it used to be. Bitcoin's up and MicroStrategy is falling. So that's not a good look. It's still on my greens list. I'm still hopeful it'll turn around, but it's not there yet. EXTR is a very good looking play. Power gap, right? Here's your power gap up on earnings, hasn't filled. And it's very strong growth metrics. Here's a quantum play, a little bit on the red side today. Uber, I think, breakout, retest of the 50, bounce yesterday, and back down again today. So Uber's not a really big moving stock. It tends to be kind of sluggish these days, but I think fundamentally it's a good place to look for swing trades. Rocket Lab is kind of doing the same thing and had the breakout, just couldn't hold. It's been testing the top of that line every day. Gap and crap, gap and crap, gap and crap. We have a wheel play on this. We probably will be out of it on Friday unless it turns around. We'll see how that goes. Let me think here. RGTI is my favorite among the quantum names. It did come out with earnings last night. It was another miss. I don't know why it keeps doing that, but I like the setup here. This rounded, no, that's not the one I want. It's a rounded bottom anyway, and if it can break out, it's not there yet, but if it can break out that resistance trend line, now I'll need this, then it's a buy. We're long MGNI. We've been waiting for it to break out of this consolidation pullback here. It's getting close, but a lot of patience required with that one. GLXY, it's up and down every day this week, every day last week. It's been getting some good call flow. It is in part a play on the new BLSH stock that came out and IPO'd today, and because it owns a big chunk of that. It's also a play on Ether because it has assets in Ether, and it does some other stuff. I'm not exactly sure. We have HUT calls on in the options room. It's doing fine. It's in breakout mode. Keep an eye on Upstart. It was a very good rally off of the April lows. Big slam on earnings. Held at the 200, 3-bar reversal today. It's up on a down day. And that's, short-term bounce, I think, back up into about the 76, 77 area. Looks pretty good. TEM is a Kathy Wood favorite. Breakout today on earnings and follow through, and then we're long nail with some shares in a big move today. And we knew this was coming, right? We knew the housing sector beaten down, lagging, lots of fear because of inflation and higher rates, and all of that is starting to reverse. So housing sector, PHM is my favorite of the home builders. We're in that with calls in the options room. But this looks, now follow my big green stick rule. So you don't want to buy a big green stick like this today. Wait for it to cool off a little bit. It usually does. Even the next day it does. But we can get back in that one. All right, guys, it is now 2:40. And I'm sorry, I'm not going to take chart requests, but I will. I'll produce this video, get a link to you in the main room, and then we'll wind up with the last power hour together. We don't have any more room in our opens. We're full up. So anything from here is going to be either unofficial or just a suggestive trade. But as you've seen, there still is some. There are opportunities out there, and we'll help you find them. God bless everybody. Have a great rest of the day, and I'll see you back in the room in just a little bit. Bye for now.